Hey everyone, welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael, and we're excited you joined us for this adventure.
So today's very special guest is Taylor Loht. Thank you so much for joining us today.
Hey guys, thanks for having me.
Yeah, we're super excited. We had the opportunity to be on your podcast and it was a lot of fun. So I'm really excited for you to join us on this side and just give our listeners all of the valuable information that you have to share. So thank you.
Hey, it's my pleasure to be here. Thanks once again for having me, and thanks for the listeners for tuning in. Appreciate it.
Absolutely. Taylor, would you mind sharing with our adventurous family a little bit more about your background, like why you started investing in real estate?
Sure, absolutely. So we'll rewind the clock, over a decade now, but I found myself a busy professional. I got out of college, a degree in engineering, and I thought, I'm finally getting some big boy money coming in. How do I turn this into more? Because I was sitting at a desk and I hated my job, and I thought, okay, I want to find my way out of this, and I'm decent at math. So I read this book that some of your listeners may be aware of, The Intelligent Investor by Benjamin Graham. And that really led me to Warren Buffett's style of investing, or at least his thought process behind it, value investing in publicly traded stocks, and led me to the conclusion, index funds, blah, 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 that kind of thing. Mm-hmm. A few years went by, and that was right after the Great Recession. And, things were doing pretty well. It was hard to pick a loser at that time, really, in the publicly traded markets. But I was doing the math again, I'm a math guy, looking into the future, into my 40s, 50s, 60s, and so on, and seeing that something's not working out here. I'm not really satisfied with what's going on. I realize I need to change my trajectory to earn more money, build more wealth. I need to change something to achieve my goals. And I started looking for that thing, and I knew the kind of standard answers that a lot of folks know. The answer that I came to initially was go get an MBA. Go get an MBA. I think I can get into a pretty good school, and I'll go maybe earn, $100,000 more a year or something like that. I don't know, but that was the answer that I came to. I was flying around the country at the time for my day job and studying for the GMAT on planes and everything. It was very, very stressful. But ultimately, I took the test and I got a pretty good score. And then I happened to be also listening to podcasts on these plane trips. And some of these podcasts were talking about real estate investing, Bigger Pockets and others, and just had a general interest in that. One of them mentioned this book, Rich Dad, Poor Dad. I've heard about that, but I've never read it. And I read it. And after I read it, I thought, he's saying everything, all the misgivings that I had in my mind about going and getting an MBA, I'm going to spend in terms of tuition, opportunity cost, everything involved, housing, all that. I'm going to spend $300,000 to buy myself another job sitting at another desk that I don't want to sit at. I don't want to be a banker. I don't want to be a consultant. Sure, they make good money, but I don't want to live that lifestyle. No disrespect to those guys. If you want to do that, good for you. But he pointed me to cash flowing real estate. And I just thought, wow, okay, it can be done. And that started my transition into becoming a real estate investor, if you will.
That's amazing. So from that, how did you transition to real estate? Was it, single family stuff? Cause I know, Rich Dad Poor Dad talks about single family first, but then did you start doing some research in real estate investing after that, learning all the different types of real estate investing, and what kind of path did you take after that?
Yeah. So though, exactly like you said, the one that most people are familiar with is single family investing. We probably rented a single family at one point, or maybe most people growing up probably knew a couple of single family rental property investors here and there that you just kind of meet. I had met those folks and, worked for a few of them at, summer jobs in high school and that kind of thing, painting places. And I learned about that. I learned about all the other strategies. I went out networking. I spent a lot of time at these networking events, again, listening to podcasts, reading books, learning about what's out there. And I'll tell you, single family investing, no disrespect to it, but it never gave me that excitement of I could do this all the time. I had, what gets me excited is really what I think I was looking for. Maybe not consciously, but I think that's what I was seeking is something that I could do, nights, weekends, holidays, and have it not feel like work, because it's so, again, exciting. Obviously it has to be profitable as well, or, it'd be a big waste of time. But, I kept researching the single families. Again, didn't get me excited. One that everybody runs into is wholesaling, which to me is just another job. And I had no interest in it. And that's usually pitched as a no money down way to get in real estate. Well, I had money, so that wasn't a problem. And it is, again, just seemed like a job. Everybody knows about flipping. I learned about flipping. And again, I wasn't excited by that because it doesn't build passive income, for one. For two, it's not taxed as passive income. It's taxed as ordinary income. It's much higher, at least in the United States. And I met a lot of flippers and, again, no disrespect, but they weren't living the lifestyle that I wanted to live. I could see, okay, this guy's 20 years ahead of me in this business. He's doing XYZ strategy. Do I want to be him in 20 years? No. And I met a lot of those folks. Eventually, I met multifamily investors and real estate syndicators, and they were doing what I wanted to do. They were living the lifestyle I wanted to live. And just that business got me so excited that I knew that that's the path that I wanted to follow.
So, but now we hear very often that, even with the economy all over and with single family homes, though, I hear so often appreciation, I can get, $100,000 more, 150. And actually, I was with some friends in Denver last weekend, and they were telling me that a block away, there was a bidding war for a house on the corner. And at the time, the bids were still $1 million over asking. It blew my mind, right? I was like, what is going on? And so there are a lot of people, though, who are like, well, but single family can still work. Granted, it might not be exciting, but it still works. So how do you, I guess, deal or handle those conversations? Or what do you think about that? Because the appreciation does go a lot of places. And even now, a lot of houses are cash flowing. And so it can work for people, but the same with syndications, right? So many people, and a syndication is just a group of people who go into an apartment or any commercial real estate together in order to take down a bigger deal. What are those conversations looking like? Or if you have that conversation in your head, what does that sound like?
So I think it's important to focus no matter what you're doing. There are so many ways in the world to make money, not just in real estate, but you can make money selling stuff on Amazon. And I've met a lot of folks who make 7 figures selling stuff on Amazon. They'll go to Bath and Body Works and buy up stuff on sale and list it on Amazon. And I've met folks that were making a lot of money doing that. Why am I not doing that? Well, because that's not my thing. If I constantly get distracted and derailed by these other ways that work to make money and to build wealth, then I'm never going to make the progress that I need to make. And that's not just me. That's everybody, right? We need to focus on what we're working on. Absolutely. There are a lot of people making money in single families. I know folks personally through networking who have built big portfolios by doing single family BRRRR deals. Here, I live in Richmond, Virginia. Here in the Richmond, Virginia area, they did great. They built big portfolios. Now, granted, that was mostly before the pandemic driven increase in prices, but it's probably still possible if you're resourceful enough and look for the deals. I think once you pick a path, no matter what it is, you really have to stick with it and not get that shiny object syndrome. And that's something that my progress in this business years ago really is accelerated when I acknowledged that I have a predisposition towards shiny object syndrome and I need to avoid that at all costs. And I think that goes for a lot of people in this business that maybe have similar predispositions to me, right? We get distracted by the shiny object and we kind of put down the one that we were working on, that we were starting to make some progress on, and go to the other one and start at zero over there. And then we get to the next one and the next one, right? So that's really my thought about getting distracted. There are a lot of ways to make money in real estate investing. I think we need to find, for all of us out there, we need to find the one that's right for us. With the syndication business, for example, that you mentioned, it wouldn't work if everybody wanted to be an active real estate investor, frankly. If everybody wanted to be the one going and finding a deal, negotiating it, or whatever, doing the asset management, and nobody wanted to passively invest and passively earn a return in real estate, then the deals wouldn't work. Everybody would be it would just be JV. That's okay. It takes a lot of different people to make this business work. And that's one of the things that makes it so much fun.
I want to hit on that point about single family stuff that what Susie is kind of mentioning, and see what your take on it as well is. I think a lot of people confuse residential real estate and multifamily. I mean, multifamily is still considered technically residential, but it's also a commercial side of it, right? Mm-hmm. And a lot of people don't understand how or what the difference is between residential and multifamily. And that residential properties are driven, as Susie mentioned, appreciation, stuff like that is driven by comparables in the market, right? And while residential multifamily, because it's a commercial real estate, it's a business, is driven by the income that the property produces, like the price of the property is driven by that. What are your kind of thoughts on that? And like, especially right now, like a lot of people are worried about a correction that might occur in the market because everything has shot up so much. And, on the residential side, there could be a correction because comps will come down. They're not going to appraise houses for even higher as they keep going up, while commercial real estate or multifamily commercial real estate is driven by income and therefore shouldn't have an effect if there is a correction in the market. What are your thoughts on that?
So it's very complicated. And one of the things that I oftentimes think about and reflect on is how the Great Recession, back starting 2007, 2008, was partially driven by the fundamentals of real estate, and some markets were oversupplied, but it was also the capital markets and a lot of things happening on Wall Street. I mean, if you go back and watch The Big Short, or that's one of my favorite movies, or read the book, it gets a lot more into kind of the details and the minutia and the way that the investors who are featured in that figured out what was going on. Is, it's important to bear in mind the overall capital markets and how they can impact the real estate market generally. But in terms of real estate itself, most markets are still terribly undersupplied. There's just not enough inventory on the market to supply the demand. And at least in terms of the total number of housing units versus the number available, that's going to take years to fix. It doesn't matter what happens. Now, can you envision a scenario where the debt markets dry up again and that severely impacts the ability of buyers and investors to borrow? Of course, you can totally envision that. And that's one of the things that's outside of our control. But as real estate investors, we should work to be prepared for those scenarios, especially since that's already happened and we have an example, a case study to prepare for. So longer term debt, have reserves in place, don't be too aggressive in your underwriting. Those kinds of things I think are all very important. Now, in terms of the differences in the business, I mentioned this before we started recording. My fiance and I are in the process of buying a new house right now. We're actually closing this week on Thursday, moving all of our stuff, and we're going to be selling our old house. And that is something that is a decision that I initially struggled with until I went back to the principles that I discussed earlier of focusing. So there are a few reasons we're going to be selling this old property, even though it would cash flow as a rental. It would make money based on my math. We've lived here for years. I've done all the maintenance items. There's not much to do. And given the rents in the area, what we paid for it and all those kinds of things, it'd probably make a couple $100 a month. But I'm going to be selling it anyway and cashing in on the appreciation and moving on to other things and focusing on our multifamily investments. First off, there's a focus that I mentioned. We already, work very hard to find these multifamily deals. And by selling, I get to cash in my equity and put it toward other investments where I believe I can make a higher return. I'm not talking about any particular deal right now. It's just I believe that we can accomplish that when we go out and find a new deal in the market. The focus. There's the time aspect. I would hire a property manager for this home if I were to rent it out. Finding a tenant and all those kinds of things, dealing with them and calls and all of that, it's not worth personally my time. It's not something, not something I want to do. It's going to cost me, it would have cost me money to hire a property manager, but your time has value. That's one of the biggest lessons that I've taken away from all these investors that I have spent time with at these various masterminds is they value their own time very highly and very intentionally. They're going to put a dollar value on their time and evaluate anything they're doing, at least in business, based on that. Now, when you're talking about family and friends and all those kinds of things, maybe take the dollar value off the table. Spend time with your family, irrespective of the dollar situation. But if you're talking about managing a rental, then think about the value of your time and your focus. Then the next thing is capital gains tax. Since I've lived in this property for the last few years, I'm going to get to wipe out the capital gains tax. But if I move out, turn it into a rental, and a few years go by, and I haven't lived in it for 2 out of the last 5 years, then I don't get that exemption. And by my math, the cash flow and the future appreciation of the property would not make up for the fact that I can just wipe that tax out by selling right now. Yeah. So those are all the things I'm thinking about in selling this. But there are a lot of folks who want to start as real estate investors by buying a new home, move out of their first one and rent it out. And that's fine. There's nothing wrong with doing that if that is in line with your goals. For me, it is not in line with my goals. It's not in line with my business. So that's not what I'm doing. And once I had evaluated all those things and had clarity on my goals, then there's no question in my mind anymore about whether I'm going to turn this into a rental. I have my path moving forward, and all of the other things, getting it listed, getting it sold, that's all details. We're going to get that all taken care of here. But I have my path, and that's what I'm doing. And I feel very comfortable with that because, again, it's in line with my goals.
Yeah, I love that for sure. It's good to have, investment thesis or, what you plan on doing and then sticking to that plan, right? Like in that shiny object syndrome, like you mentioned earlier. But Taylor, obviously Susie and I, and you are very aggressive in, investing in real estate right now. You said you're taking that appreciation, the equity you have through appreciation, and then putting that into future real estate investments. Like, although we are aggressive because we understand the power of real estate, there's a lot of people who really don't understand the power of real estate and are very timid right now because of what's going on in Wall Street. Have you seen this because we both raise money? Have you seen this with some of your investors? Are they having any challenges or doubts in the power of real estate right now when they see Wall Street taking such a dip?
I would say that yes, overall, I have seen a general pullback or becoming a little bit more conservative on the part of many investors. And frankly, it's hard to blame them, right? We all watch the media. Many of us have Twitter or Reddit or whatever, and you see all the negative headlines. And to me, I tend to, when I see a negative headline, especially about real estate, because I'm so invested in knowing what's going on in the real estate market, both residentially and commercially, I'll dig into it and try to understand, how did they come to this conclusion? Do I agree with their analysis, or are they just trying to, score political points or make a headline or whatever? Right. I think of one example recently where, and I'm working on this off of memory, but popped up in my Google suggestions of these markets we're seeing a drop in housing. We're seeing this start of the housing crisis. So, as a political site, I'm not going to say who, but I opened it up because I want to understand, is there data here that I need to know? And would I come to the same conclusion to them? So I read this particular article, and their conclusion was supported, quote unquote, by the data that average listing prices have fallen year over year. I think this one in particular was in my market here in Richmond. And, we've been engaged in the market, so I think I have a pretty good idea personally of what's going on. So they're saying the average listing value has fallen year over year by such and such percent. But to me, the conclusion that is a sign of a weakening market is not valid based on that data, because the average listing value is influenced by so many factors. Maybe bigger houses were coming online last year and coming onto the market last year, so they're going to be listed for more. You need to dig. If you want to come to that conclusion, you need to dig deeper into the data, maybe look at dollars per square foot, but not just the listings. Look at what they're actually selling for, because asking prices are just, especially in this market, they're nonsense. I mean, we lost so many offers, and this is our home. So it's not an investment. It's the place where we intend to live for the next decade plus, right? This is just a future, home for us. We need to dig deeper into the data and really understand. And right now, in a broader sense, the data that I'm seeing, at least in the single family market, does not indicate a weakening single family market. Mortgage delinquencies are not up. They're still trending downward. And again, I'm keeping an eye on these things. If that changes, then I'm open to changing my position, but I'm not seeing it happen yet. So delinquencies are down. In most markets, the inventory is still very low in terms of units available and the month's supply on the market, but that could also change. If people stop making their mortgage payments, then that's a bad sign. But due to all of the appreciation in the market, these single family owners have a considerable amount of equity. So I think if the market does start to turn, which again could happen, I don't think it's going to happen, but I'm not ruling it out. I want to remain data conscious, right?
Right.
Scientific about the approach here.
Right.
People still have a lot of equity. And I think we're a long way from the situation in 2007, 2008, where there were a lot of folks who bought homes that they weren't qualified for on variable interest rate mortgages. Those variable interest rates shot up. They couldn't make their payments, and the price of houses started to fall. They were suddenly underwater with a mortgage they couldn't pay, and all these houses came back on the market. The situation's different now.
Totally.
The variable interest rate mortgages have pretty strict caps because the regulators got, they knew what happened and they put caps in place. Variable interest rate mortgages are nowhere near as prominent now as they were prior to the Great Recession. And, at the end of the day, people need a place to live and housing is scarce. If I could wave a magic wand and make housing not scarce, I'd probably do it. Even though I'm a real estate investor, I do have a heart, right? I would fix this problem if I had a magic wand, but I don't have that. And all I can do is respond to the conditions in the market and what I see,
What I'm trying to think of, for people out there who are listening, who are still I get what he's saying, but I want to read it on my own. It's where would you guide them to just to search a little deeper if they had just been reading headlines this entire time?
Well, when you see that headline, no matter where it is, you got to open the article, go deeper than the headline and try to understand the conclusion or the data that's informing their conclusion, no matter what that headline is. And maybe you agree, maybe you disagree, but it's so easy to write a headline and then very flimsily support it. But I want to take a step back and step away from the headlines and the articles and those kinds of things. For the folks out there who are feeling, this is probably a shaky time to invest. I don't know. I want to remain conservative. I'm not going to tell you not to do that. I'm going to say if that's your conclusion based on the best available data, then I'm never going to give somebody a hard time on being too conservative and having too much in reserves, right? People get in trouble when they're, betting it all on black and really rolling the dice. I think there's nothing wrong with taking a step back, but remaining engaged in the market. In my opinion, you see a lot of new real estate investors trying to get into the space. And this is the whole time I've been a real estate investor. You see people who want to get engaged, but they say, is now a bad time? I was hearing this in 2015, right? Is now a bad time to invest in real estate? Values are so up. I'm just going to sit on the sidelines. And in my observation, the quote, I'm going to sit on the sidelines is really more of an excuse for inaction and not doing anything than it is a data-driven conclusion. In my opinion, if you are going to sit the market out, again, nothing wrong with that, but stay engaged. Keep an eye on what's happening. If you're out there more actively doing deals, keep making offers, even if you're getting rejected, because again, if the market turns, the people who are engaged will be the ones who get to take advantage of that. So even if your thesis is there is a crash coming, I disagree, but that's okay. If you think that, don't step back and disengage from the market. Stay involved, because the people who are still involved but are remaining conservative, if the market turns, they're going to be the ones getting the deals. You're going to miss out, because when the market turns, if you are being conservative, the market's going to turn, and then you're going to say, oh, now's an even worse time. But there's that Warren Buffett quote of be greedy when others are fearful, and fearful when others are greedy. Well, he's very good at that. He's one of the best in the world, and it's not an easy thing to do, but he looks at deals all the time. He's always evaluating companies, and he's very picky on what he invests in. So if you are out there, you're concerned about the future of, real estate, maybe over the next couple of years, that's okay. There's nothing wrong with that.
Yeah.
But keep looking, stay engaged, right?
Yeah.
The people who are doing deals are going to get the deals, right?
Totally. And even when it's in that quiet period, that is really when people get deals. So once you start to figure out that history, it becomes something that you're used to. Then it's oh, I noticed that it happened here, here, and here because I paid attention during those 3 different times. So the likelihood of me missing that opportunity for the 4th or 5th or 6th time is high, So it's just paying attention to all of those things. But you have I have loved every single thing that you have said so far. It's kind of a bummer because now we have to get into our adventurous 4, which are the 4 exploratory questions that we ask every guest. But even before that, we will have to just have you back on because you have so much value. Thank you, thank you, thank you.
Anytime. Let me know.
So Taylor, for the first question we have for you is, where is one place you wish to travel to and why?
This is a tough question because I do enjoy traveling quite a bit. One of my favorite countries I've been to is Italy. I've been there a few times, a few different places around Italy. been to London, Paris. I've been to South America and Peru. Honestly, it's tough to really, pick a place.
Yeah.
I like the experience of, and it's kind of overwhelming, but I remember walking through the streets of Cusco. I'm sorry, this is kind of a long drawn out answer.
You're good.
But I was, realizing, and this is after I'd been overseas a few times, but realizing that probably no one around me, from what I can tell, no one around me really speaks English, and I don't really speak any Spanish. I didn't then, and I don't now. And just that feeling of I'm the other, I guess, if you will, is just, it really broadens your horizons. And I think it gives you more of hopefully a better understanding of what it's like to be somebody in the US who's, not native, maybe doesn't speak English very well, and just hopefully maybe helps you feel a little more compassionate toward that experience or something like that. And I'd love to go back to South America. Been a vegetarian since 2015. My fiance is a vegan, so our travel options are a little restricted, but there are several places, especially in Germany and more Eastern Europe. There are a lot of great cities with options. I'd love to go to Prague. I've heard great things about Prague. It's hard to pick one, right? But so many great places.
Yeah. We're also vegan too, but we plan our trips kind of around restaurants and stuff like that.
I would love to hear any tips. My fiance would be all ears as well. So.
Very surprising. Like Europe caters to vegans more than the States do, even in like bigger cities like Denver and LA. It's really wild. So yeah. Anyways.
Yeah. But second question, what is one thing on your bucket list and how are you leveraging real estate investing to achieve it?
So yeah, along the lines of my motivation to become a vegetarian, 7 years ago or so, it's just really down to, compassion for animals. And I don't really talk about this that much publicly because I know it's very polarizing and I don't want to seem judgmental toward anyone because I ate meat for the first 25 years of my life every day. So I don't, give anybody a hard time about it because I was there and that was me. And I, I'm a pretty accepting guy, but, part of my goals in real estate investing, and this is built over time since I've done more deals and made more money through real estate. I've seen what's out there, right? So my number one as far as real estate goes, and I'm still again forming this. I have a number in my mind that I don't want to say publicly in terms of funds that I want to donate to animal related causes. Whether it's a shelter, there's a shelter nearby here that I already support, but it's not as much support as I want to give, down the road. But hey, I'm in my 30s. I got a whole life left to continue supporting that. So, I got a number in my mind that I don't want to say publicly because it's a little gross, but very ambitious goal with real estate investing to donate toward maybe animal shelters are in my mind or other causes along those lines.
No, I love it. Awesome. I tell Michael sometimes that I want to buy an island and have all of the animals on the island with us. So I totally get it. I do.
Absolutely. And the third question we have for you, Taylor, is what is one piece of advice for someone who wants to start passively investing in real estate?
Understand your goals. Know your goals. Take a step back and understand what do you want to get back out of this in real estate and understand what you want to bring to the table. I think those things are both in line, but real estate investing, no matter which way you're going to go, comes back to your goals and yourself.
Absolutely. Yeah. Like you chatted about earlier. So
then the fourth and final question is, if you had unlimited resources available to you, how would you leave an impact?
So when I was in college, I took this class on my senior year last semester. Took a class on entrepreneurship, and it wasn't really even a class. We met successful alumni who kept their relationship with one of our professors. They came back and spoke with us, and we got to go to dinner with two of them. We got to pick two of them we went to dinner with. And one of the guys I went to dinner with was much older man. I'm not honestly certain if he's still alive. He was older, but he was orphaned growing up. He went to University of Delaware, where I went to. I think he got his PhD in chemical engineering, which is I have a bachelor's in chemical engineering, and that's how we knew our professor. But he went on to invent something, I don't recall exactly what, that was involved with basically the explosion of computers around the world. And he became a venture capitalist, became very successful. Just to give you an example, while we were at dinner with him at this restaurant in the town where I went to school, the president of the university, who was just there in the restaurant with somebody, came across the room and said hi, shook his hand, said hi to him because he donated so much money. And that President Harker, is now the president of the Philadelphia Federal Reserve. So he's not like, it wasn't a small college. It's a guy with a big footprint. But he had donated so much money that a wing of our building was dedicated to him. This gentleman. I wouldn't donate money to the university. They have quite enough, but in my kind of somewhat vain mind in some ways, I'd like to get to that point where I have maybe a wing of something named after me. Maybe it's vain, whatever. The point is donating the money, but that's always kind of stuck in my mind that this guy made such an impact on me without even really realizing it until I'd met him and seen, oh, that's his name on this. He donated a lot of money. Oh, okay. I get it now. It's not quite unlimited, but it would be something along those lines.
Yeah, totally. I totally get it. I love that. I do.
Yeah. Absolutely. So before we end the show, Taylor, would you mind sharing with our Ventureless family how they can find out more about you and get in contact with you?
Yeah, absolutely. So I recently put out a free 7-day course on red flags in passive real estate investing that your listeners can get by going to passiverealestatecourse.com. I was kind of surprised that URL was available at passiverealestatecourse.com. And that's 7 things that it's not an exhaustive list of everything that can go wrong in a passive real estate deal, because that would be encyclopedias of data. But these are the top 7 things that I've seen go wrong in deals that I've observed over the years that I've been investing in real estate, both actively and passively, because I do both sides of that equation. I wanted to really distill that and make that available for folks. So passiverealestatecourse.com. That'll get you my email, and I'm pretty available, happy to chat if folks have feedback or questions about that. I'm certainly willing to have a conversation about that. My company, NT Capital, ntcapitalgroup.com. And of course, my podcast, the Passive Wealth Strategy Show, which you guys have been on. Your episode went live very recently, every Monday, Tuesday, and Thursday, helping our listeners escape the Wall Street casino and build wealth on Main Street by investing in real estate. That's all I got.
Yeah, no, thank you for that. And we will make sure to include that in the show notes so that everybody can find you very easily. Taylor, it has been a pleasure to have you on today. Thank you for everything.
Thank you for having me. Have a great day.
Absolutely. Until next time, explore more, adventure awaits.
Woo!